So this is how to trade profitably on Binance futures trading. The first thing you need to understand about trading is that price does only two things. I repeat, price does just two things. It either sweeps lows or highs, old lows or old highs, or price seeks to fill out imbalances in the market. Imbalances, I'm talking about fair value gaps. Now, once you understand this basic principle, trading becomes super easy for you. Now, I have a very good example here. I'm going to walk you through how I trade, the mechanism I use, the approach, the rules, the guides, everything, and how you can actually set up your own trading plan or your trading setup from scratch. I'll talk about higher time frame, key bias and direction. I'm going to also talk about my entries, and I will talk about the entire framework. So pay detailed attention to the very end of this video so you don't miss out on anything. This is MJ Crypto, by the way, if you're just joining in for the first time. So the first thing we need to do is come over to the daily time frame or the 4 hours time frame. Now, in this scenario, I'm making use of the 4 hour time frame. Now, look at this picture. Are we in an uptrend or a downtrend? Just look at this very clearly. What are we doing? What is price doing? Price is currently in a downtrend. Remember the first rule, to sweep lows or highs. Second rule is to fill out inefficiencies or imbalance or fair value gaps, whatever you want to call them. So we're constantly breaking lows, we're sweeping lows now. So the first rule is obtained. Now, the second rule, we want to start filling up imbalances in the market. For those of you who do not know what imbalances or fair value gaps are, there would be a video in the description of this current video you are watching that explains what a fair value gap is. Or basically, you could just see it right here on the chart. Now, filling out fair value gaps is the second rule, and you can see price is currently filling out fair values. So we're going to map out all the fair value gaps and look at price is reacting from them. Price is just basically reacting from them. We have one reaction here. This one has nothing has reacted from here yet. Price has not reacted. So basically that's what we're doing, right? That's basically what we're doing. So the next thing we want to do is to look at price is currently breaking structures to the downside. Now we want to see where price has not filled an imbalance. Remember, we have one here. This one has been filled completely. So let me knock it out. There's one here that has not been filled. And I think that is the only one left that has not been filled to 100%. Okay, now if you look at this region here, you're going to see that price actually filled up all the imbalance. So the market is now efficient. An inefficient market is a market where you have gaps or fair value gaps. But the moment price fills up all gaps, it becomes an efficient market. Now, at this point, we want to actually tailor down our entry model. So we're going to go down to a lower time frame, like an hour, and see what price is doing overall. Now, the moment we see what price is doing overall, it gives us a very good picture of what we should expect. So we have one here. We have a break of structure here, or what we call a liquidity sweep. A liquidity sweep here, a liquidity grab, whatever you want to call it. Now, how do we know it's a liquidity sweep? We're going to see price react massively. The moment we start seeing price react massively and breaking structure to the downside, then it is clearly a liquidity sweep. So we're going to put here BOS. We'll put here break of structure. And look at the impulsive move. Look at this. Impulsive move to the downside. Right? Impulsive move to the downside. Now, remember, price will do two things: sweep lows or highs and fill up inefficiency. Now, it has done the very first part here now. It has done the very first part here. So we want to see price come back again to fill up all of these inefficiencies. All of these inefficiencies, these gaps. We want to see price attempt towards sweep or fill into all these gaps. Now, what are we expecting? We're expecting a retracement back to this gap. Okay, we're expecting what? A retracement back to this gap. If you are very conversant with how liquidity is engineered into the market, you would see clearly that we have an equal highs somewhere here, what we call a failure swing. Okay? Now, sitting right below this fair value gap. So what I'm expecting is that price will come down from here, trade all the way up. A lot of persons would say it's not good to trade into your POI, you just have to wait. But if you actually know what you are doing, you can take a buy from here. Now, how am I going to take a buy from there? I will simply just explain, put it on 15 minutes. I'll simply just explain what liquidity is for those of you who do not understand liquidity and how it is being engineered into the market. Now, first things first, when you see a price action like this, and price simply just respects this zone, right? Price respects another block. The liquidity is usually going to be resting below this low. This is where you find your liquidity, below the low. All right? You are definitely going to be finding your liquidity below the low. So what I would expect now, simple structure, structural liquidity, I would expect to what? See price break through. So the moment I see price break through from here, retest this other block, go up again, I would now take my valid entry from here. Now, what I've just explained is simple. It's very, very simple. I said in an uptrend like this, when an order block is respected, liquidity 90% of the time would be resting below its lows. Resting below its lows. Then the price breaks below it. That is when I look for buys. So if price should have a break of structure here, let's assume we see this now. I'll start buying from here back into this region, into the supply, sweeping out this liquidity here, this inducement, sweep it out completely. So basically that's what I would do in a scenario like this. I would simply just do this. Although you can just wait for price to come back here, react, and then you do your thing. if that is what works for you. So if we go back to 5 minutes time frame, we should be able to see a setup from there. You wait, price comes down here, you buy into this block flow of supply. Now, when price gets to supply into what this fair value gap here, put this on 1 hour. Price gets into this supply. We start looking for what? Sell confirmations. We start looking for sell entries from here because the market is overall bearish. We're not bullish. Overall what? Bearish. So this is how you frame your setup accordingly in alliance with the dominant trend from the daily or the weekly or the 4 hours. Now, I'll give you another example. I think that was on Prom or PTB. Let me show you PTB. PTB, I'm currently on this trade. Currently on this trade right now. Yes. Currently on this trade as we both speak. So I'll just show you from the 15 minutes what it looks like and what we're likely going to get from this trade. Now, let's look at the overall structure, first of all. The overall structure is what? Is bearish. Can you see? Made a break of structure. We swept lows. Remember our first rule. And now we're coming back to what? Fill fair value gaps. Internal liquidity. So coming back to fill fair value gaps somewhere around here. I should put this on 1 hour time frame. You're probably going to see where the fair value gaps are. You see? So we're coming here to fill a supply or a fair value gap, whatever you want to call it. There's a supply here. Okay, we're coming back to fill that supply. Basically, that's what we're coming here to do. So we're filling all of this supply. We're coming back to fill all of them. Then, look at the moment price tapped into it, broke structure from here. And we began to go down, creating this trend line liquidity, right? Then I implemented my Wyckoff schematic from here. Implemented, let me just knock out everything so the chart looks cleaner. Implemented my Wyckoff schematic somewhere around here. This was my range. Oh, yes, this was my range. And then I saw my jump across the creek, which was this here. I gave this trade to my community members as well. I'm not going to eat alone. So I got this, saw this happening, saw a break structure. And if I scale down to lower time frame now and wait for all the fair value gaps to be filled, if there is none, then we should be thinking of filling a supply, probably somewhere around here. I see price is already generating the liquidity it needs, generating liquidity. So the moment we get here, we should expect a sell from this region. Simple. Nothing really serious here. Should expect something like this. And then we sell all the way down probably maybe to this point. Or we could even sell further. So that's just basically how to frame your setup, how to get the best from every possible scenario, right? That's the best way to get these things done. This is MJ Crypto. Have a great time. Practice this, but test it. It works. Every strategy works. So you just have to find your edge and capitalize on what you know how to do best. I love, guys. Signing out.